RKB Accounting specializes in cross-border taxation. Your one-stop solution for filing taxes in the United States and Canada. RKB handles income tax, sales tax, payroll, and bookkeeping, and also helps in incorporating your business on both sides of the border. Please visit us at rkbaccounting.ca to learn more about our services.
Okay, so we start from the beginning. Bookkeeping made easy for you. What is bookkeeping? When do we need to do bookkeeping? Tools to do bookkeeping, things to consider in bookkeeping, and benefits of bookkeeping. What is bookkeeping? Bookkeeping basically when you make expenses for your business, you pay for telephone, you pay for traveling, you pay for gas, you buy materials, you pay bank charges, licensing fees, and many expenses. So you need to categorize all those expenses by category. Here in all accounting software, normally you will hear categorize kind of thing. But in India, we call it posting in general ledger. So basically, general ledger is the categorization. So you categorize expenses by their nature. So if it is traveling expenses, you can record all traveling expenses in that. Few people like to separate them depending on the volume of expenses and nature of control you want to establish. So if it, again, in travel expenses, you can say air travel expenses, bus travel expenses, vehicle expenses. In vehicle expenses, you can say gas expenses, repairs and maintenance, leasing charges, like that. So all these, the way you organize your expenses is called categorizing or posting in general ledger. At the end of those categorization, you balance them out. So basically, when you incur an expenses, the expenses goes into debit and your bank goes into credit, and those balances should match. So you understand that your categorization or your postings are correct. At the end of your bookkeeping, you produce a trial balance and you record some adjusting entry at the end of the period. So adjusting entries are those entries which you do not do in your regular bookkeeping. For example, recording amortization. So you record your fixed assets when you incur them, like you bought a laptop, and that laptop is going to last for 5 years. So you charge your expenses over the 5 years. So it depends if you want, if you produce a monthly profit and loss account, or if you produce an annual profit and loss account, you do an adjusting entries for that. At the end of the year, you have income tax payable, so you record your income tax payable under the adjusting entry. Few people have some allocations, like suppose if you have a head office, there is a head office, and that head office has 5 pizza stores. So to calculate the profitability of that pizza store, what they do, they allocate their head office expenses to each store. So those will come under the adjusting entry. All the categorize, whether you call it a categorization or posting into GL, are based on 3 golden rules. And those golden rules are debit all expenses and losses, credit all income and gains. Debit what comes in, credit what goes out. So if the goods is coming in, you debit it. When you are selling the goods going out, you credit them. Debit the receiver and credit the giver. So debit the receiver, yes, debit the receiver. So the person who is receiving money from the business, you debit them, and credit the giver. So when person who is giving to the business, you credit them. When do we need to do the bookkeeping? When you are in a business and want to know at the end of the period how much is my expenses and income, what is my profitability, cost center analysis, For example, if you're doing a business, you want to know how much I spent on marketing expenses, because that is important. At the same time, if you have 1, 2, 3, 4, 5 salesperson, you want to track their expenses, how much they are incurring on traveling expenses. When you want to report income and expenses on GST, HST return, so if you are registered for GST, HST, you want to claim all your GST input tax credit, HST. So you need to record them and allocate the GST, HST portion in the ITC category. When you want to prepare your income tax return, you need to do your bookkeeping, whether you are self-employed or you are in business. Even if you have a rental property, you may need to do a bookkeeping so that you can track your expenses. As per the legal requirement, CRA and IRS requires you to maintain the bookkeeping, books and records, bills and receipts. If CRA is auditing you, they will ask you to print out a particular category or general ledger for the expenses or the income they are auditing. Tools to do the bookkeeping. When your business is very small, like you have $50,000, $100,000 turnover in a year, you want to do it in Microsoft Excel, because if you go for any accounting software like QuickBooks, Zoho Books, say Simply Accounting, you will have to pay for that. So depending on the size of your business and the functionality you want to choose, you can select your software. There are two types of software nowadays: desktop, which is based on your computer, and cloud-based, like QuickBooks Online, XERO Online. ERP system. ERP system is basically an integrated system, and normally it is used in manufacturing environment, because in manufacturing, what happens that you have raw materials, and that raw material is converted into finished goods. So you can design a recipe inside the system, and when the raw material is converted into finished goods, so what the system will do is reduce the raw material and at the same time create the finished goods automatically in the system. You just need to input the number that so many pieces are manufactured. A few other benefits of this ERP system is they are integrated. They are integrated to from sales to manufacturing. So the moment a salesperson receives an order, he enters into system, and the production people can check if they have inventory, finished goods inventory, or they need to manufacture. And if they need to manufacture, how much they need to manufacture. SAP, Oracle, they are very good software in ERP. And even QuickBooks have ERP system. You can have an in-house bookkeeper who works in your office, comes every day and do the bookkeeping, or you can outsource, like nowadays freelancer bookkeepers are available, or even in India, Mexico, and various Asian countries, people are doing bookkeeping for your business through online software. Choose your bookkeeping system based on volume of your transaction. Things to consider in bookkeeping is timeliness, sources of transaction. So you need to be careful that where are my sources of transaction that I need to capture. For example, if you are selling, then if you have your own warehouse, then you know that this information is coming from my warehouse. The moment the goods is dispatched, the accounting department gives them instruction that you provide the information immediately. Similarly, if you have a rented warehouse, then you can instruct them that the moment you ship the goods to the customer, you need to provide the information. At the same time, you can ask your employer, you can ask your client that what are the payment system used for their expenses, or which are the accounts they receive the income. So somebody will tell you that, okay, I use my personal Visa card, I use my business Visa card, I use my crypto wallet to do the transaction. So all those sources you need to note down and capture transaction from there. Accuracy is very, very important because entire system is based on accuracy. It will help you minimize your tax liability. At the same time, you can have a clear picture of your business, cash flow, profitability. Category and subcategory, like we talked that you can either put a travel expenses, or you can create a subcategory: fuel expenses, vehicle repair, vehicle leasing charges, air tickets, hotel, or you can put everything in one category. Analysis, review, and report. Very important. Whether you do a bookkeeping for yourself or your client or your employer, whatever you do at the end of the bookkeeping, you need to do an analysis. There are two types of analysis I recommend generally. One thing, past is always a good teacher. So the moment, suppose if you're doing a quarterly HST return, then you have completed the bookkeeping. So try to compare the numbers from the previous quarter. So you run the profit and loss account column by column. When we work on the software, we will see that how that looks like. So you do a comparative profit and loss account, comparative balance sheet, and you analyze that any increase, any decrease, and if there is an increase or decrease, you question that. Second thing is reasonability. So suppose if you are doing this is your first year of business, and this is the quarter you are doing, or you have a new client who has just started their business. So look at from the reasonability point of view. For example, a pizza store. So if you look at their cost of goods sold, I would say their cost of goods sold should have around 30%, 40% in restaurant business. But if the cost of goods sold for a pizza store looks 80%, or a restaurant 80%, that doesn't sound right. For $100,000 revenue in a business, and if you see that traveling expenses is 20,000, so you need to look into that category, look into individual entry. Have I done categorization incorrectly, or is there something not right, personal expenses, or something is wrong? And then review it, and finally report it. So before reporting, remember, you need to do an analysis to check your work yourself. Benefits of bookkeeping. All transactions are recorded. So all transactions are recorded. So the moment you do a bookkeeping, so normally nowadays in North America, for small or medium-sized business, they do bookkeeping from the bank statement. Or even if you're doing full cycle bookkeeping, which we talk about, then also the one of the most important thing is for control purposes, that you need to make sure that all transactions are captured, and that comes from various sources. So for example, bank statement, you do the bank reconciliation. Once your bank is reconciled, then you can consider that all the transactions in the bank statement have been entered. Business information is organized. So if you are doing bookkeeping, your informations are organized. For example, you want to see which products are selling more, which cost center is growing, what is the profitability, what is your cash flow. You can do a cash flow forecast. You can prepare a budget. Easy to make business decision by reviewing reports. So once you review your report, if your cash flow is tight, you may not want to invest in fixed assets. Maybe defer it for next month. If you have surplus cash flow, you may look for investing extra cash. Filing accurate taxes. So there are twofold in it. You want to save your taxes. At the same time, when it comes to question from IRS or CRA, you are in a position to answer them accurately. That's it. So any question on this?
Yeah, I have one question. So, for calculating these things, do we need any software or any app? There are any app or all thing we need to do on Excel sheet and like that.
When your business is small, that decision you need to make based on the volume.
Mm-hmm.
So if your business is small, like you have you're doing dance classes from your home. So and relatively your business is very small, say $50,000 in a year. So you can do it in Excel. But if your business grows, like you want to give professional invoice to your customer, so you need to look for a software who can create a professional invoice, like that can put a logo and that can track your outstanding invoices, uh, receivable aging reports. So depending on your requirement and volume, you will look for buying a
Okay.
software.
So, like, my question is, like, suppose I want to do some freelancing for, for any company, then I have to use any software. So, are you going to like demonstrate us any software also here for bookkeeping, or we have to do it ourselves?
In the next class, we are going to cover. We are going to start working on the software. First thing, we will start with the bookkeeping QuickBook Desktop,
Mm-hmm.
uh, and then probably when we progress on second on third class, then you can go and download a 30 days free trial from QuickBook Desktop.
Mm-hmm.
So by the third class, you will know what you can do in a accounting software. So after that, when you install, then you have another 30 days to practice on it.
So, just
There is
last point. So, do we have now I get the software where I can practice. I get a lesson from you also how to practice. Now, where can I from where I can pick the data with which I can do the practice? Because obviously we can't we can't think of those like numbers which really exist in the market. Sometimes we may be able to think, but sometimes it is difficult. So, is there any source available where we can refer for data?
uh, I will give you one sample data to prepare a profit and loss account,
Okay.
and that I think that should be enough. The
Yeah.
idea is no matter which software you practice, and no matter how many years experience you have, the software is like they keep changing and they keep bringing new tools. So nobody is going to be master in any software unless and until you are researching every day. The When you are trying to become a freelancer, there are 4 or 5 things you need to be aware of. One is, if you see any software, one is how to prepare an invoice. What are the usually fields in on an invoice which are must. For example, customer name, you have to be there. Due date, it has to be there. Date of the invoice, it has to be there. Product or service code, it has to be there. Rate, quantity, amount, GST, HST number. These are the fields important. After that, you can have 100 numbers of field, project, uh, salesman, whatnot. So what you need to focus on the basic required information, and you should know those basic information, that I need this information. And in any software, you just tell me where to create an invoice, and you are able to create that invoice. Similarly, accounts payable, how do I enter the supplier bills? When you do the account invoicing, then you also need to learn how do I receive payment on the software. When you do the supplier bills, you need to learn how do I pay the bills. And the third thing, how to reconcile my bank. And the fourth, how to do the payroll. And only you will concentrate only on the required information. And once you know that, you should be very, very confident that I know this software. But if you look at the software, it has 100 more than 100 options that you can export, you can import, you can do this, you can do that. Those things will come from experience. Have I answered your question?
Yeah, got your point. And yeah, only by practicing more and more we can learn. So that makes
Yeah.
sense.
Yes.
Okay.
Only need to focus. Hey, what is this software? Zoho? I have never worked on it. Okay. How to prepare? Where to prepare the invoice? Okay. How to receive the payment? Okay. How to enter the supplier bill? How to do the bank reconciliation? These 5, 6 things I know. I know the software.
Yeah, like what are the inputs I have to put, that I have to think whenever I'm working on a new software. If I understand that what are the inputs where I have to put, then I think it will be easy for us to work on that.
Yes. Yes. And somebody asks you, hey, do you know that you can import transaction? I have. Yes. I think I've never done that, but yes, I know. And then you do a research on that, look into YouTube and
Yeah,
do
yeah,
the
sure. This works everywhere actually. We have to be confident on what we are working.
exactly. Okay, any other question?
It's like mandatory fields, right?
Yes, you should know the mandatory field.
Oh,
Even if you are going for an interview as a bookkeeper, what you are supposed to tell them the mandatory field. You know QuickBooks?
okay,
Yes,
got
I know QuickBooks. What you know on the Quick? I can prepare invoice. I can enter supplier bills. That's it. Period. And then somebody asks you, oh, do you know how to import transaction from an Excel? I think QuickBook has the capability of doing that, but let me research on that. I can do it. Yes. Okay. So, sorry. Any other question?
Yeah, I have a question. Are
Little loud,
bookkeepers
please.
hello?
Yeah, I think
Are you
your mic is not in front of your.
are you able to
Yeah.
hear me now?
Yeah. Better.
Yeah. My question is, are bookkeepers responsible to analyze the reports also? Means, do they need to provide the analysis of the reports um, for other companies? Or if he or she is doing for himself, for his company, that's okay. But for others also, they need to provide.
Not really. Bookkeeper are not financial analyst. Financial analyst roles are different. The objective of financial analyst is to control the cost of the company
Mm-hmm.
and increase how to increase the revenue of the company. So their objective is different. But a bookkeeper must do an analysis to make sure that he hasn't made any mistake.
Okay,
So
for correction of data.
yes. So for example, you saw in a bank statement that every month they are paying $1,200, and you thought that this $1,200 was for car leasing, truck leasing, and you put it in the leasing expenses. So when you run a comparative P&L from the prior period, you will say, oh my God, my leasing expenses is too high. Let's drill down. When you drill down, then say, oh no, okay, let's find out what is this. And then you ask your client or your employer, you say, no, this is not for truck. This is I've taken a separate warehouse and I'm paying rent. The same thing your boss is going to do, that he will analyze it and then he will tell your mistake.
Mm-hmm. Okay. So it's only for the correction of data and the numbers and
Exactly.
not the
Exactly.
report. Yeah.
Yes.
Okay. Thank you. Got it.
Because now the kind of software we have, we don't see not in I'm not aware of India, but here you don't see anything called accounting clerk. I don't know if I have ever come across any position called accounting clerk. Straight away bookkeeper, because those days are gone, and bookkeepers are supposed to be smarter. And when we call smarter, that means they are responsible up to doing the bank reconciliation and a limited review that they have not made any big mistake. Okay, so there are two types of bookkeeping. One is full cycle bookkeeping. So what is full cycle bookkeeping? Uh, I'm starting with the entire process, and in this process, uh, some of the steps are involved in the bookkeeping, some may not. For example, if you are preparing a purchase order to buy raw material, you may have a software to prepare a purchase order, or you can do a manual purchase order. And nowadays, people do email. They send their purchase order on email. Hey, please ship me so many items. So that manual email becomes your purchase order. So you do so some accounting software they record as purchase order. Like QuickBooks has the capability to raise a purchase order. Then from the purchase order you receive goods. QuickBook has the capability to receive goods. That becomes your inventory. And when the supplier bills come, you process the supplier bills. So basically you debit your expenses, inventory, purchases, and credit the accounts payable. So that goes and sit on the accounts payable. From the accounts payable, when the supplier bill is due, you pay them. So you record your payment. So this is called full cycle bookkeeping. And same process applied for the accounts receivable. Receive customers order, prepare quotation. Then when the goods is shipped, you prepare invoice. When the payment is received, then you process the account payment on the QuickBook. So for example, take the accounts payable. In accounts payable, you created the supplier bill and you pass a journal entry, debit inventory, credit accounts payable. When you pay them, debit accounts payable, credit your bank. So there are two entries. But small to medium size businesses nowadays are doing bookkeeping from bank statement. So basically, in place of two entry, debit inventory, credit accounts payable, and debit accounts payable, credit bank, you do only one entry from the bank statement. From the bank statement, you need to understand that this payment is made to the supplier for the purchase of material. So when you see that the wire payment has been made to USA, you understand that, okay, this wire payment normally for the purchase of material. So you debit purchases or inventory and credit your bank. So in place of doing two entry, you are doing only one entry. And this is much easier and less time consuming. But one problem comes when you do the bookkeeping from the bank statement, it becomes cash basis of accounting, which is not allowed in tax or even as per the accounting principle. As per the accounting principle and for CRA and IRS, we do the bookkeeping on accrual basis. That means when a transaction, for example, when you have received the material, even though you have not paid for it, but you have to account for. And in the bank, you will record only transactions which have been paid or received. So for example, for my clients, I do the bookkeeping only from the bank statement. But at the end of the period or at the end of the year, when I need to file the taxes, I convert that cash basis of accounting into accrual basis. So for example, my client's year end is 31st December. So I will ask him to provide the bank statement for next month as well, January or February, maximum 2 months. And we will analyze January and February payments and receipts. And I will ask my question, was this payment made for the purchase of material? This material came in December or it came in January? So we'll say, here is the five payments which we have made, but the materials were received in December. So we will make an accrual. Similarly, we will look into the bank statement and we see that, okay, Roger's telephone bill was paid in January. So I know this payment was made for December. Or if the Roger bill is not 1 to last day of the month, then we will look into that what period it has been paid, and we will prorate and make an accrual. So that's the way at the end of the year we will convert cash basis accounting into accrual basis of accounting. And the reason for doing the cash basis of account bookkeeping from the bank statement, it becomes very easy and less time consuming. Meals and entertainment, I think we talked about that. Only 50% you can claim for the business purposes. HST also you can claim only 50%. When you are doing processing a transaction for meals and entertainment in any software like QuickBooks, XERO, Zoho, or any software, normally when you claim HST, when you are processing that transaction, you need to apply a code, and those code are created inside the software, and that code is linked to GL and linked to certain calculation. So suppose in QuickBooks you might see ON bracket purchase 13%. That means that is Ontario 13% HST on purchases. So suppose if you are processing a supplier invoice, or you are doing bookkeeping from bank statement, and you are entering a transaction for inventory expenses credit bank, then you have to select that code ON 13%. So similarly, when you are doing for meals and entertainment, you will find the same 13%, but you are not supposed to claim 13%. So in that case, you need to find in that software, how do I create a special code? Normally, I call it M&E, meals and entertainment, 5.75%. And how do I calculate 5.75%? So suppose expense is $100 and you paid 13% HST. So it becomes $113. And what I'm telling by creating that code, that that code will claim 5.75% of $113. You can check on your calculator, because out of $13, your input tax credit allowed is only $6.50. So if you take $6.50 divided by $113, it comes approximately 5.75%. If you do it that way, life is very easy. Otherwise, what you can do, you can process the transaction little differently. Debit expenses $100. Debit expenses $106.50, and then debit GST HST $6.50, and then the credit goes to bank account. So here it is $100, so you can easily find out $650. But if it is $2,213.14, then you have to take the calculator and do this and that. So the best thing is to find out where you can create a HST code in XERO, in QuickBooks, and all other software. They must have it. For in XERO and QuickBooks, I know it is there. So we are doing bookkeeping from the bank statement. We don't need to ask everything to client. The moment I see on the bank statement the text appearing, ESSO, Petro-Canada, Ultimar, Shell, Husky, I do understand this is fuel expenses for vehicle. I can either categorize as vehicle expenses, motor vehicle expenses, traveling expenses, whatever the chart of account has been designed for that client. GST, HST, yes. Telephone expenses, Roger, Bell, Fido. You see on the Visa card appearing payment for Bell. So you understand this is telephone expenses. You claim GST, HST on that. Utilities, same. But utilities, you have to be careful. Not in all cases, water has GST, HST. Property tax, it is exempt from GST, HST. Insurance expenses, it is all exempt from GST, HST. All government taxes and financial services are exempt from GST, HST. Interest expenses exempt from GST, HST. Office supplies, staple, Dollarama, Dollar Store, Walmart, meals and entertainment, McDonald's, Tim Horton, office equipment. You can look into the bank text. When the client has payroll or your employer has payroll, then he must be paying monthly remittances. And you will see the text appearing on the bank statement, EMPTX, PD7A. And the moment you see these text, you understand this is a payment for CRA for payroll account. If it is paid for GST, HST, then it will be GST-P, GST-something, corporate tax, TXINS, TX balance. TXINS is corporate tax installment. TXBL is corporate tax balance. E-transfer, some banks provide the details that where the e-transfer has been done. Some banks does not. In that case, you have to ask your client that log into his bank account and look into his history of e-transfer, and they can provide that. Rent, need to find the landlord, ask for the leasing agreement. Payroll expenses, depreciation, provision for expenses, home office. I think we touched. So if you are doing business from your home, so suppose you are running a dance class from your home, so you are using certain space, unless you are doing an online classes. If it is a physical class, then you are using space, your basement as a classroom. So total is take the total square feet of your house and divide that space used for business, and that percentage you can apply to your home related expenses if you are paying rent, property tax, insurance, utilities, and some sort of repairs and maintenance. Motor vehicle expenses, you need to ask your client. When you're doing the tax return, you need to ask make, model, year of purchase, purchase price, date of purchase, total kilometer drop for business. So total kilometer drop include personal and business, and kilometer drop for business. So only business percentage of business, the percentage used for business purposes will be applied to your tax return as an allowable expenses. Fuel, repair, maintenance, these are the expenses for the motor vehicle. Car might be on lease. If it is on lease, leasing charges. There is a limit on the leasing charges, how much you can claim, even if it is 100% used for the business. Usually, a vehicle up to $30,000 is allowed for tax purposes. So if you buy a Mercedes-Benz for $80,000 or a car for $400,000, it is not allowed for. You can still input that vehicle cost and all the information, but the system will automatically claim only up to $30,000. Fuel, gas, repairs and maintenance, insurance, license plate renewal. So basically, these are the things we are, before working on the software, we are preparing what you call like other ingredients when we do the bookkeeping or when we learn on the software what we are going to do, what we are going to enter. So basically, we will take this and we will enter one vehicle expenses, one telephone expenses, one utility expenses. But you should be aware that what are the information you need, where are those information, and where it can come from. Any question on this?
Yeah, I have one question.
Yeah.
In QuickBooks or any of the software, the deductions which are to be performed, it is by default it is set, or we have to set that those deductions.
Sorry.
For meals, it is deductions is 50%. Okay.
Right.
So it is by default. It will be there, or we have to set on that software.
So when you have the meals and meals and entertainment,
yeah,
you have two claims.
Okay.
One claim is your expenses on your deducting from income, and one is your 50% HST and EC. So the ITC, QuickBooks will take care, and on your tax return, you have to enter it on the tax return total amount, and it will take care over there.
Okay. Okay.
Okay, so let's go on 3A, bookkeeping from bank statement. This is for my staff. How do they do instruction? How do they do bookkeeping from the bank statement? So they have been given clear instruction that whatever you see in deposit is income, unless you see any large amount. Like usually they receive from customer 5,000, 4,000, 3,000, 5,000, 4,000, 3,000, 7,000, like that. And you all of a sudden you see one entry for 25,000. So you need to question that, even if it is not a round figure amount, transferred between the accounts. So you need to find out which account it has been transferred and why it has been transferred. And before recording that transfer, you need to investigate round figure amount. Usually, most of your invoices usually are not in round figure. In exceptional cases, it could be. So you need to analyze that whether it is your income or not. Same thing for expenses. If you see any unusual large amount transferred between the account round figures. Processing, categorizing expenses. I have another software, Clockify, that where I have given some instruction about my client. So when you are doing bookkeeping from the bank statement, you read the text, find out if it is if this text is for a major Canadian store, then find out what this store sells. This will give you an idea that what is the nature of expenses it could be. If it is Fresco, so you know that the client is using his business Visa card for his grocery. So you categorize them as shareholder expenses, and at the end of the bookkeeping, you send that to your employer or your client, and ask them, are these expenses related to business? Because you bought something from Fresco, or you bought something from clothing stores. If you can't understand, Google it. And this is very important. Search within the QuickBook and XERO. In QuickBook and XERO, both have a search facility. You can search a transaction which has already been entered in the past. So suppose if you see some payment is repeatedly coming every month, you see $235.50, $235.50 every month. So that means this transaction must be in the past. So you can search that amount. And when you look into that search facility, there could be various options. You can search by exact amount. You can search by over this amount, below this amount. You can search by bank text. You can search by invoice number. You can search by customer name. You can search by supplier name. So there are various facility. So if you are doing bookkeeping for your client or for your employer, you need not go to ask your employer or your client that what is this expenses. Before you do a search and make sure that, okay, now I couldn't find anything. Now let's go and ask. For repeated amount, when you're doing the categorization expenses from the bank statement, remember that there could be some capital expenditure. So, something has been bought from the Best Buy. If it is $15, $0.60, $65, $30, you can understand that this is small electronics, and it could be categorized as office expenses. But if you see a large amount, $1,500.70 or $1,340, then you should ask the client or your employer, is it provide the bill, or let us know, is it you bought a laptop or you bought any other electronic equipment, and whether it is to be capitalized. Personal expenses, grocery, clothing, everything goes to shareholder loan. And at the end of the bookkeeping, or at the end of the year, you send this statement to shareholder to confirm that these are expenses, looks like are your personal expenses. And then the shareholder will, or the client will come and say, no, this is for business, this is for business. Be aware of categorizing banking transaction in QuickBooks Online. When you go to QuickBooks Online, when we work on that, you will have 4 different types of posting platform, or I don't know what do I call it, but there are 4 different ways you can process the transaction. One, you can categorize the transaction, categorize, as I said before, post it into general ledger. You can find a match. Find a match is generally applicable when you are doing account receivable or accounts payable. So suppose you created an invoice for a customer for $5,000, and then after next day, 20 days, 30 days, the customer pays you $5,000. So as per when we are doing the bookkeeping from the bank statement, the instruction is clear that whatever deposit you see, you should put it at income. Now, if for that $5,000 there is already an invoice exists, because clients creates the invoice and send it to customer, or your sales department creates the invoice, send it to customer, then in that case you have to find a match. You do not categorize that, because if you categorize that, then the sales will be posted twice. Your income will double. So in that case, you do not categorize that. You only find a match. If you don't find a match, then you investigate, because this bookkeeping, what you are doing, may be a hybrid system, that okay, only invoices, customer invoices are prepared and rest of the entries come from the bank statement. And somebody may have full cycle, like full cycle bookkeeping, accounts payable, account receivable, both. Then you don't do the bookkeeping from the bank statement, then you do it from the actual bills and receipts. Record as a transfer. This is another way of processing the transaction in QuickBooks Online. For example, when client has 2 bank account, 3 bank account, usually we see that my US client will have 2 accounts. One is US dollar and one is in Canadian dollar, and they always send money from US dollar to Canadian dollar to US dollar. So those you do not categorize, you do not find a match, you record that as a transfer. There is a separate selection there. So you select this, record as a transfer, and you record transfer. Record as credit card payment. You pay the business pays from its checking account to credit card. There is a separate selection there. You separate record as credit card payment, and you process the transaction from that method, that way. Check your work yourself. Run comparative profit and loss account, review changes, GL wise, investigate large amount. This is when we are covering the GST, HST. We do GST, HST reasonability test. I do it to make sure my client is getting correct amount of HST refund, or he is paying correct amount of HST, GST, HST reasonably, not 100% correct, reasonably. And when I say reasonably, the difference could be 1 to 5%. Do not use in QuickBook and Xero bill payments, that is account receivable and accounts payable. When we work on Xero, we will learn about that. There are 2 ways you can add a bank account. Even in QuickBook, there are 2 ways to add a bank account. One is you add a bank account, like you're connecting the bank account to online banking. And in that case, when you connect the bank account through the online banking, the moment there is a transaction in the bank account, it will it will feed it into your QuickBooks or XERO. Even you can connect your Visa account. Another way, you simply go to your chart of account, and as you create like office expenses, purchase expenses, other account, you create a bank account. So in XERO, when you add a bank account, that means you are connecting your bank account through the online banking system. If you do that way, you will not be able to pass a transaction, create a transaction through journal entry. But if you add a bank account as a regular any other general ledger, then you will be able to use journal entry system or process a transaction through journal entry into your bank account. When you add bank account and connect it through online in XERO, then you can only do transaction, spend money and receive money. But in QuickBooks, under both the method, you can use the journal entry to process transaction from bank. Do you know you can create your own rate or charge for GST, HST? That's it. Any other question? Hello?
Hello.
Hello?
Yeah, just want to confirm that while doing the bookkeeping through bank statement, we have to ask for all the cash transactions from the client separately, right?
Yes, that's a good question. Yes.
Okay, thank you.
Cash transaction, or there might be some transaction which he paid from his personal bank account, personal Visa account.
Yeah.
So that question at the end, you need to ask your employer, your client, that are there any transaction that you have paid from your personal bank account or personal Visa account, which you have not provided.
Yeah. Okay. Thank you.
Major Canadian stores, this is not so important, but yes, people who are in India, they should know it, that, okay, if you see the bank text paid to Home Depot, that means there might be some construction material, repair and maintenance item. If you see gas station, like that. That's it from my side.
One question I want to ask,
Go ahead.
which you have already explained, that $100 expenditure into 13%, that 5.75 concept you told us. So can you please repeat the same? I didn't get it properly. That's why.
Okay, so you incur an expenses for $100,
Okay.
and you know in Ontario HST is 13%, so you must have paid $113. And when I look at your bank statement, I will see you bought gas from Petro Canada for $113. Sorry, not Petro Canada, Tim Horton, because it's a meals and entertainment. So you bought a meal for $113. Now I know that out of $13 HST you paid, you can only claim $6.50 HST ITC credit.
Yes, yes.
So there are two ways you can claim on the when you are doing the bookkeeping in QuickBooks or in XERO or any other software. You go and debit the expenses. First, you put the total amount what you just spent, credit to your bank, and then you create a breakdown that my expense is $106.50, because that 50% of GST, HST not allowed $6.50 for ITC. That will be your expenses. So your expenses will become $106.50, and you manually process $6. You manually debit $6.50 into your input tax credit or GST, HST ledger.
Okay.
That is manual. But normally when you process the transaction in QuickBooks or Xero, there is a HST code. You have to apply that HST code. So suppose you incur any expenses, you put the total amount and then you select the HST code. If it is Ontario, you will see ON HST 13%. If it is British Columbia, you will see that BC GST HST 14%, like that. So in this case, to make life easy, what you can do, you can create your own code. So when you create this own code, what is the percentage you want to claim? So percentage you want to claim is $6.50 divided by $113.
Yes.
So that this way, when you are bookkeeping for meals and entertainment, you go and select that code. You go and select that code. You don't have to calculate and then put the GST HST separately. It will be if it is not too much, 1 or 2 transactions in a day, that's not a problem. But when you have many transactions in a day, definitely. Like when we do the bookkeeping, we do after 6 months or at the end of the year. So the client sends us all the visa statement, 12 month visa statement at a time. So when my staff is doing bookkeeping, he's processing meals and entertainment every 10 minutes because he's doing bookkeeping for 12 months at a time.
Yes.
So he can go and select the codes. Go and select the code.
Okay. Okay, thank you.
Thank you. Any other question? No other question. Good.
Hi, I have another
Hi.
question. So sorry.
Yeah, go ahead.
Where you said that to add the bank account online in QuickBooks, we are not in Xero. We are not allowed to have general to go for general accounts, right? Means
Yeah.
what we call that. Yeah, but not in the Xero. Sorry, I'm a bit confused right now. So
Okay,
how does it affect means the doing it passing the journal entries and not doing it means how does that affect the bookkeeping?
Okay. So let me explain that. In any software, there are various types, including Tally in India and everywhere. When you are a bookkeeper or bookkeeper doing for client or your employer, you should be aware of that this software, does it allow to pass a journal entry, enter a transaction in bank through a journal entry. When you are doing the year end or doing anything, you may come across that you want to process one journal entry which has 6, 7, 8, 10 line items. For example, when you add a credit card, Visa card is also considered a bank in the system. So my client gives me a personal Visa card. He had made some expenses from the personal Visa card. Now, I'm not going to enter all the transaction because there are hardly 10, 15, 20 transactions which relates to business, and his Visa card has 200 transactions. So I'm not going to sweat myself for entering the 200 transaction in the system and claiming for business only 20 transactions. Then in that case, what I will do, I will put those 20 transactions in an Excel file and make a total. And when I'm making a total, I will put it there. What is total traveling expenses, total meals and entertainment, total office expenses, and I will pass a journal entry. So in that case, the journal entry become important.
Okay. For large number of transactions.
Sometimes the client will give you his personal bank statement. Many expenses I used to do it from my personal bank account. So in that case, you just pick up those transactions and put it as a journal entry. Basically, in any software, there are 3 types of there could be 4 types of transaction. When you're creating an invoice, how to create an invoice, that will be a transaction platform, how to process a transaction, and you have to select a particular invoice processing. You cannot create an invoice through journal entry. So there will be a button, a selection, posting voucher. That voucher is called creating invoice. Then the second voucher will be creating a bill, supplier bill. Third will be processing a bank transaction, and fourth is your journal entry.
Okay. Thank you. Got it.
You're welcome. Any other question? No.